All right, what is happening, traders? What is up, everybody? What's up, CTM? What's up, YouTube? We're gonna take a look at the Bitcoin breakout, see if there's any weight to this thing. How's everybody doing? Oh, there's that phone. I forgot to take that stuff off. Gotta get rid of that. All right, here we go. Let me kill this music, or at least turn it down a tad bit. Good afternoon, everybody. So what we're seeing on the Bitcoin charts just happens to be a little bit of a breakout there. I do have a vertical line. We're going to get into that. I did take a trade yesterday on algo and I lost it because I took a short on an obvious area that I shouldn't have been trying to take a short, and we'll explain that. But first, let's get into the Bitcoin analysis. You can see there is an obvious descending trend line right here. I simply took that trend line from the high of the June 15th candle. That was the bear trap, because if you look at this candle over here, that was your resistance level. I will put it on the chart for just a second and then I will delete it. You can see how you traded right up into that candle, closed right on the level, which is usually indicative of bullish price action. But then you just started making lower closes. And anytime you take a daily candle and close, that is more important than anything else. Once you took out that bullish candle's low, we were looking for a support test of the last resistance, which would have been this candle right here. All right, you can see there's your breakout. This move here would have been your retest. Once you close that daily candle below that level of old support, now resistance, any test of that level would have had to been looked at as a short side setup. So this was a bull trap. So let's get rid of that level. Since that bull trap was put in, you have made a lower close on the daily, taking out all of your lowest daily closes. That is, ladies and gentlemen, a breach of support. Once you put in that close, that is your support test. Broke, come back up. This is just choppy. It's impossible to trade when price action is doing this. But as you can see, if you look at this right here, you put in another bull trap with a beautiful close above, and then you came back in, traded sideways until you ultimately got that break. Once you got that break, you traded all the way down to the yearly opening range. This wick low right here was a test of that yearly opening range. We can go get that yearly open simply by going to the quarterly chart, marking up this fantastic bullish open right there. That is your January 2021 open. Go back to the daily. There is that test. Boom. Got a little bit of bullish price action until you came back in for another test. You did not get a test because price was being front ran. People love to buy yearly opens because anybody that did not get in on any of this price action over here, well, set out buy orders to test that. This is your descending trend line. You can clearly see a bullish breakout above that. This Wednesday candle of last week came out from the B word conference between Elon, the maker or the owner of Twitter, and then ARK Invest owner. So basically, yeah, you could say that you got some bullish price action because of that. Simply, if you don't pay attention to the news and you just look at the chart, what do you have here? Well, how many pro sellers are going to take short positions right into the yearly low? I can name none. So yeah, that's why you have exhaustion risk. Exhaustion risk works from the upside just like it does from the downside. Professional traders aren't looking to buy highs and they're not looking to sell lows. Only retail does that. So this is why you're having a nice bullish pop up out of the area. It is important. It is an important area though, because you did have this descending trend line, a test of it, a rejection. Next day you traded as an inside day, which is basically just consolidation, and then there's your breakout. Boom, right there. Today you're doing the same thing. However, you took out yesterday's highs. So you can see that you are trading into daily resistance right here, $34,259.23. This level is going to be resistance until you get a daily closure above it. That's how price action works. So right now, what we are looking for is we are watching for a test of this last area of resistance right there, 32,816 bucks. That is your last daily resistance. That's your last bullish open and close on a bullish candle. Since that candle was put in, you can clearly see price reversed from there, came in, put in a slight retest, and went down to that yearly open. Since the yearly open test, you have had strong momentum coming out of the area, coming up into that. There was that breach. So if I go over here to a 4-hour chart, you can clearly see on this 4-hour candle. Let me go back real quick. Sorry, guys. Let's get rid of this level right here. This level is unimportant as to what we're talking about now. So basically, if I go back into that, that is your daily level right there. That is your resistance. You can see this beautiful test right there, and then you failed and closed and put in a new 4-hour support. Once this new 4-hour support was put in, price tested it and traded away from it. There is your break on a 4-hour level of that daily resistance. Basically, what I'm trying to say is watch for a retest of this level. A 4-hour closure does not mean that it will be the end of that level, as there are such things as bear traps and bull traps, and we are about to get into that stuff. So let me just go ahead and apologize for the slurring, guys. I am a few drinks into the night. It's been a pretty rough day, but I absolutely need to get this in here. All right, so there's the breakout. We are looking for a pushback into that area. We definitely want to see that hold as support on at least an 8-hour closing basis. As long as you are unable to close an 8-hour candle below that level, we will be looking for possible long side setups, as I don't know how far price will go up before the sellers start to get re-engaged on this asset. All right, so you do have multiple areas of possible resistance ahead of you and above you, but there's no reason to mark up the charts and make them that dirty. Just keep an eye on this level down here. Do not pay attention to today's candle, as if you are only paying attention to today's candle, tomorrow and Monday's price action, if you get some bearish price action below the low of today's candle, you're going to start to get a little bit worried and think that this is a selling opportunity. I must say that in downtrends, any pops in price can be selling opportunities. So there's really no reason to get worried about it. It's just what happens. All right, that's how trading works. But instead of looking to buy up here, if you're looking for long positions on Bitcoin, wait for that 32,816 test. That's probably a pretty good level to take a look at. So let's go back down into a smaller time frame and let me discuss this trade. Let's get rid of this trend line, as we know that we have already broke above it. You can already see that once you broke above it too, you came in for a 4-hour retest right here. Never mind this 7:22 p.m. line. That's going to be for what I'm about to talk to next. You can see that you did get another lower 4-hour close, and then boom, straight out of there. But this would have been your 4-hour support down here, because that was the lowest close in this section of price that's moving up. Please do not put a trend line from this swing low to this swing low, as that is too parabolic, and that trend line will more than likely get broken before you test the daily level that we're looking to see a test at 32,816. All right, so let's get out of this. Let me go over here. Excuse me. The trade that I took yesterday was on algo. We're going to drop down to an hourly level. As a day trader, we watch daily highs, daily opens, daily lows, and daily closes, specifically the previous day. All right, so we're looking for shorts on algo yesterday. This up before I show you why. This trend line is going to say bye-bye for now. If I bring you over here to this time, July 22nd, 2021 at 5 o'clock p.m. Eastern Standard Time. 1700 hours is 5 p.m. Eastern Standard Time. You can see that Bitcoin put in an hourly support level at that time on that day. Time and price is all that matters in this trading game. And when that bit of knowledge sinks into your head and you understand the fact that it's time and price, you will start to see a little bit more, and your eyes will start to basically open up, and your brain will start to accumulate more knowledge about how price action works. 5 o'clock p.m. Eastern Standard Time on July 22nd, Bitcoin put in an hourly support level right there. Let's go to the algo chart, because I was watching the algo chart alone. I was not watching Bitcoin. If I go to the same time, right there, you can see down here that that's 1500 hours. That's 2 hours before Bitcoin put in its 5 o'clock p.m. support. The 5 o'clock candle on algo is right here. It's this bullish candle. Let me stretch it out a little bit more. Right here. This is the same time when this candle was produced on algo USD. BTC USD put in a support on the hourly level. I, however, was not watching Bitcoin's chart. I was watching this chart alone because a lot of stuff's going on. Here is our purge of support. Slightly, just slightly. Then we put in a lower high right here, came in and test a Heath level, aka supply zone. I did not invent these levels, guys. I just say Heath level because it helps the newer members understand that when I say that, I am talking about a supply zone. Here is your bullish push up into that supply zone right there. I did not take that entry because you are making higher highs and higher closes on an hourly. Boom, when this candle right here forced its way into the house of this support and took its TV, microwave, and toaster, I was like, yep, we're probably going to be watching for a test of another supply zone and look to get short. So this candle or this level then migrates down with price to this last bullish candle. Now, right away, I do not like this last bullish candle simply because it has such a massive range. For this 1 hour, price had a big range, a very low close, a very high close, very big in comparison. There is the breach of the level, and we took out this support zone. So we were looking for price to run back up into this Heath level and get short. I was going to dinner last night at Chuck's Seafood. It was going to be a fantastic dinner with family because of death and all that. This is where I had a limit sell with a stop above this. I should have never taken the trade simply because if I bring this support level down here to this new hourly support level, never mind this gap, never mind the gaps, this is your bearish close, that is your support level. Once we put this in, even if we would have tried to get short, well, I did try to get short and I did get stopped out. But what I'm trying to say is if you look from this section, from this open to this low, if you put in a risk reward tool, you will clearly see that the risk reward was skewed from the right off the rip. There is your risk to reward. It's less than 1 to 1. It's like 0.92 to 1. That's not a trade experienced traders like to take. So this is why the trade did not work. Let's go back to Bitcoin and show you the fantastic magic that we had on Bitcoin. And had I just been paying attention to the Bitcoin chart, I never would have looked to get short. Bitcoin is the tide that lifts all boats, guys. Whatever Bitcoin is doing, the algos and bots on most, not all, but most other altcoins and cryptocurrencies are going to do what it does, with some fake outs here and some fake outs there. But ultimately, whatever Bitcoin does, those assets will do the same. There is that support zone right there. Boom, there's your 5 o'clock support. Bitcoin tested it with a close above. Another test, close above, another test, close above. I would have never, ever been looking to short Bitcoin on this push up into this Heath level of this supply zone, knowing that Bitcoin attempted to close below support and did not. This is bullish price action. All right, this is absolutely bullish. This is candle whisperer type of stuff that I'm trying to show you. Had I been looking at the Bitcoin chart, I would have never been looking to go short on algo. Why don't I just short Bitcoin? That's a simple question. I'm glad you asked. The reason I don't just short Bitcoin, guys, is because I buy Bitcoin. I am a buyer of Bitcoin. I only buy it. I will trade other assets. I don't need to trade Bitcoin. I make plenty of money trading FX and stocks and other altcoins. I don't have to trade Bitcoin or Ethereum. So I don't just trade them. I simply buy them, both of them. I have a lot more weight in Bitcoin over Ethereum because reasons. All right. So with that being said, boom, there is your bullish price action. I should have never been looking to take that short. That is why that short failed. I did explain that to anybody that followed me on that short. Obviously, this is why we only take 1% most of total account equity per trade, because not all trades work out and not all people are gods. Not all people are able to take 100% flawless trades at all times, because emotions control the trading game. My emotions were not set. I wasn't ready. I was just rushing a trade, trying to get into one. All week on FX, every trade was a win. So that stuff starts to get to a trader as well. You start thinking you're better than what you really are, and that all trades will work. Had I been looking at the Bitcoin chart, I never would have taken this trade. This is why this trade has failed. Now, with that being said, let's go back to Bitcoin. So that way I can get you guys situated for some moves incoming. So let's just get rid of all these lines, all of them. We're going to start. Here is going to be the resistance level right there, 32,816 on a daily closing basis. This is your resistance level. Here you can see a beautiful test of that level and a slight rejection, and there's your breakout. So this technically is a breakout. However, with that being said, are we getting extremely bullish on Bitcoin now? No, we are not. This is a slight pop in price. In downtrends, especially when they are daily candles and you have a clear daily reversal and a clear daily downtrend, you are not looking to go against the trend. The trend is the friend until the end of the trend. In order for Bitcoin to put in a new bullish trend, we must test old areas of resistance and see if those levels hold as support. And as long as that support comes in at a higher low, then you will have higher support, higher low support. Then you may have a slight reversal in price, and then you can start to look for bullish entries. Now, someone said on the Twitter, Mr. Cosman, he is my boy, and I am never ever going to talk bad about him, but he was saying that it is slow, but if you add in the candles themselves, Bitcoin has taken out these levels in 4 days, whereas it took 8 days for the buyer. So price simply these levels, all right, to the levels of resistance. It took 4 days of aggregation to get there, whereas on the bearish side of things, it took 8 days to get there. So price is aggregating double the speed to the upside until the sellers start to step back in. Sellers will be stepping back in at every single daily resistance until you get a swing above that. What I am watching for and what I need to see before I can get more bullish on Bitcoin is a break on a daily level and a close above 40,000 bucks. This is your $40,000 level, is your daily resistance that is keeping price down. Until you get above that, you still only have another lower high, but you have a higher high compared to this section of price here, which looks better for the bulls. There was enough consolidation and there was enough time for this price action down here to basically say that it could be accumulation if price leaves the area with haste and is able to break above resistance levels. That's what it takes to be a bullish chart. You must meet resistance and you must take out resistance. If you meet resistance and fail and then take out support, you are not bullish. So Put that in your head. Understand that you need to get above that before you can start being extremely bullish on Bitcoin. I wouldn't even be extremely bullish then. I would be looking for trades and entries up to this section of price, which would be that 618 retracement level of this main leg to the downside. And you will see some increased selling there, simply because anybody that has been holding through this pain right here will more than likely want to get out at higher prices, and they will bail. All right, that's just the way price works. So emotions aside and everything else aside, Bitcoin is making a nice move to the upside. It's about time, right? Last time we seen a move like this was over here back in June. And it was a few days to the upside until the sellers came back in and purged that support. This was the support level. There was the purge of it. So here is your support level now on Bitcoin. Right there. That's your daily level support, $29,796. And it is just a hair above the opening yearly range. All right. So we still are in murky waters, to say the least. I will be watching that price right there, 32,816, and I will be looking for bullish entries on other crypto assets, hoping, or not hoping, but watching to see if Bitcoin does put in a higher low support at that area. So with that being said, let me go over here and see what chat has to say. You guys can absolutely throw whatever you want to throw up as far as other assets. I will look at them for you. There isn't nothing else that I like in the crypto sphere right now. I know everybody's looking to buy some of these fantastic moving assets. I think Matic was the biggest mover the other day. You can see that, let's get rid of this level right here real fast. You can see that this is your first level of daily resistance. You have not even traded into that yet. So just be careful. All right here, $1.02. That is your first level of daily resistance. So until you get above that, this is a higher, or just another lower high. This is a fantastic bullish daily. And you did get an inside day after, which is indicative of bullish price action as long as that inside day's high gets taken out to the upside. And you can clearly see on Friday's candle, there is your push up. There is your high taken out of the inside range candle. And you took out the high of this candle with a close. That's fantastic, right? So it does look like it's got some bullish momentum. I will not be looking to take shorts in front of this. When you take positions, price and time matters. How quick did it get there? If it got there in just a couple of days and it took 1, 2, 3, 4, 5, 6, 7, 8, 9 days to get below it, if you're testing it again on the bullish side of things in 3 or 4 days, that should tell you something. That price is aggregating up a lot quicker than it aggregated down. So this is exhaustion risk. Anybody that was looking for new short side setups down here got smoked, and now most crypto assets are looking for a higher resistance level. And you're probably going to see that across the board. It is a mixed day, however. Some assets are green on the day, some assets are red on the day. So I don't see anything astonishingly bullish about any of this. And welcome, Nanya. I'm just going to call you Nana. I can't pronounce your last name. Deani. Hopefully I'm not butchering your last name. Welcome to the Prop Firm Level. There is a live stream tomorrow morning at 11 a.m. and I promise to be sober on that one. What is up, traders? What's up, everybody? I'm glad everybody could make it, as time is precious. Grab some link and ADA when Bitcoin lifted off on Friday. Which ones? Link and ADA. Yeah, these things like to move. They like to move, man. They don't have much liquidity in them, so they can absolutely just destroy going to the upside. We are dropping a few frames, so hopefully this thing will work out. Here, let's get rid of this because this is definitely something that is old and not of any weight. So there was your last ADA resistance put in on a daily closing basis. This candle took that out to the downside, and you've seen the next day a little bit of continuation. You don't have an outside day reversal or an AKA bullish engulfing, but this is pretty close. All you had to do was trade just a little bit below that low, and that's, I mean, it's as close as you can get to be a bullish engulfing without actually engulfing the entire range of that daily candle. So that was a nice close. Look where you closed. This is what I'm talking about, time and price, right? Here would have been an area for short sellers to load up. You traded well above that level. You even took out the high of this candle, but look where you closed, right on the level. I would have never been looking to short that. There is too much bullish aggregation on the chart to try to short into that. Next day, traded down just a little bit, boom, closed above, tested above. Now you're seeing bullish continuation. Next daily level to watch for possible support is way up there at $1.32. Now, with all of these wicks and this crazy price action here, there will be levels on smaller time frame charts, aka 8-hour, 4-hour levels. There will be some. Right now you are testing an 8-hour level right there. You can see retest there, test, fail. This one is right now trying to close above that level. If you do get that close, your next level of resistance will simply be the close of that 8-hour bullish candle. Then you will be watching that as resistance. So you are not looking for any longs just yet. You want to see a test of a major resistance level and then a pullback into support. On the 8-hour time frame, you have a support level untested right there at one spot, 1.9, right there. So if you do get this push up to there, you can watch that level first, as I don't believe there is a daily bearish close yet. No, there is not. That is pretty close to near-term price as well. So I'd probably keep more of an eye on the close of that bearish 8-hour candle versus the open. Now the open would be a demand zone, and that's where we technically would like to take bullish entries, because if you test the actual support of the bearish candle, then it starts to look a little bit more weak, right? Then it starts to look like, well, maybe you're not going to get bullish continuation off of that area of demand. So it's basically, you just need to wait a little bit. You need more data. It's nice that it's taking out levels, but especially on ADA, it has not done anything on a daily. Like I said, way up here. Technically, I guess you could watch these areas as, yeah, they were support levels. This bearish candle was a support level. You can see how price reacted around it, pushed below it, closed above it, and then this was your break. So yeah, it's only natural that price will stutter step around these levels, but I like the levels in near-term price, in the actual trend that has happened lately. And this is lately, right here. And Link looks exactly the same, right? Let's go down here to Link real quick. Looks exactly the same. You're testing your first daily level right there. That's an old level. There it is. See how you're testing it, but you're not above it on a closing basis. This candle closes in 16 minutes, so it is going to appear to be a fail. However, it will still close bullish, more than likely. So you're not looking for short side sets. You look for short side sets on positions like this when you close bearish on the day, as that is a bearish reaction to a supply zone, or aka Heath level. Thank you for the stream, Heath. You are welcome. K4 Liberty, thank you for your time, my friend. Heath, thank you for your great job. Could you please explain how you use previous day high low to plan trades? Thank you. Yeah, well, here's your previous day. Like, let's just use Link for example. So if you look back 3 days, I say look at your previous day, but if you look back 3 days, you can see that each open has occurred higher in price. You see how this traded all the way down to this day's open and then reversed? And not only did it reverse, when price was testing this open, let me just draw a line down here. While price was testing this open on the daily, because it opened up here at 16 bucks, it looked bearish. It was red the whole time. Price was trading underneath that open. This candle was red. came in for a check of this day's open, and there was your bullish price action. So as an intraday scalper, if I was looking, I'm not looking for a position today on Link, but if I was looking for bullish continuation tomorrow on Link, this is important. I would not be looking for bullish continuation on Link tomorrow. And it's because you are into an area of resistance. Never buy into resistance, never short into support. You are into resistance. However, I would watch this day's open, right? So if we trade up into here and then tomorrow we open and we trade up, but we don't take out that high, and then you see some bearish price action, as long as we're not closing a daily below this candle's low, or not low, apologies, open, then you're probably still primed, and this area could possibly still be a nice area for a bullish entry. So what you can do is you can keep your resistance level on there. You can mark that simply by doing that. Throw on, like, I don't know, whatever floats your boat, daily res, boom. This way you know when you're looking at your intraday times, that is daily res. Let's throw another little line right here to say, yeah, we definitely want to watch that open there, because that open has not been tested yet. So, I don't know, DO, we'll call it, daily open. And when we go into our 4 hour, 8 hour, 1 hour charts, we're watching this daily open right there, right? To see if price is closing 8 4 hour candles below that level. If you are, chances are you do not want to look for a long opportunity, as you're probably coming down to test a 4 hour level of demand. It sounds a little bit more advanced, but I promise you, these live streams and all the videos I put out are extremely consistent. Just put a little bit of time in watching them, and it will start slowly starting to click. Click, click. Right? And that's what we all are looking for. Clicks. That way we can start learning to form a valid strategy. I will teach you how I trade, but you may or may not be able to make my strategy profitable for you. I'm showing you how I trade, so that way you can then build your own strategy to make profitable, consistent returns. It's about consistent, small returns. You're not trying to get rich on every trade. You're just simply trying to have a slow, consistent equity growth to the upside. That equity curve is important to watch. Bitcoin above MA 50, we watch on closely rejected so far. Alright, so let's go back over to Bitcoin, and I will throw on some moving averages. All the moving averages, you can find them that I use just by simply typing in the indicator bar MA, EMA combo, and there are tons of them, right? The best one comes from Crown's Crypto Cave, as these are the basic same averages he's looking at. But the indicator itself is fantastic because it's one indicator and you have as many as 5 or 6 moving averages. But I basically watch the main ones. Let's get on the daily there. The 200, the 100, the 50, the 20. I don't base trading decisions off from moving averages. I base them off of price and price alone. So yeah, you've got a little bit more time before you're trading into the daily 50. Let's see where weekly is on the MAs. Yeah, this is fantastic. If Bitcoin gets a weekly close above this 50, then what you will simply have on a larger time frame is a push below the 50 on the moving, or the 50 moving average on a weekly closing basis, but you closed bullishly, right? Would you be looking for a retest of that? No. You would want to find a level of price that is in there. And we know we have one right there. 32,816. Oh, look at that, how that moving average is so fantastically trading right below Heath's level. It ain't about the moving averages, guys. It's about the price levels. Indicators are garbage. They follow price. Price is king. I don't need any moving averages at all, or RSI, or any indicators to make profitable trades just by looking at price. But yeah, you're right. It's got some time to go before it gets up there. Could you look into Euro, Aussie, and Euro USD? Absolutely. Here's Euro USD. Euro USD is doing something very, very strange. Let's get rid of these moving averages. So it's basing in a formation pattern. Like it's trying to put in a descending wedge. Now wedges, they do work, but this wedge is a very, very aggressive one. Like come on, I am trying to click that. Thank you very much. So if you put it on here, you can see that when you got that news, ECB came out the other day, traded right up into that and rejected, and that's where we closed Friday as an inside doji. All right, it wasn't a complete inside day because you did take out this day's low. So if anything else, price is showing you a willingness to take out daily lows. Now, this day is important to me. Why is this day important? Because this day had the lowest close. So if you take this day's close, you can see that how this day pushed beneath that close, right? So that means anybody that got long on this day, they got stopped out. Then you closed as a bullish day, but you did not take out the opening price of that bearish candle, and you still have not. Meaning the bears are still in control, but be careful because you can absolutely see a fantastic bullish candle out of here because of exhaustion risk. If you come back over here and look, this is your last quarter's swing all the way over here. So yes, this near-term price action is absolutely bearish, but what are you doing? You are coming into a quarterly swing low. There is your 3-month candle. That is a quarterly swing low. There is a ton of support down there. This is why this candle is taking its sweet little time getting down there. This candle opened up on July the 1st. That is the beginning of the third quarter. This candle could simply be putting in that first move to the downside, and then from here on out can absolutely put in a fantastic 2-month move to the upside. Boom. So be careful looking for new shorts down here. Tons of support. Euro Aussie. We took a short on Euro Aussie the other day, and it was fantastically profitable. Fantastically profitable. Let's get off the quarterly. Let's go back into the daily. So this thing is absolutely making higher lows, higher highs. You are in a near-term uptrend. Into the quarterly, though, you can see it's a very small range. Very small. Let's get rid of all these lines. Throw in a quarterly resistance level because it absolutely will be the next quarterly level to watch for resistance. You are pushing up into it. The wicks on quarterlies will act as levels as well. If I put a level on that wick, you can see that that level is holding as resistance. So here we go. Still on the daily, you are absolutely still bullish. Here was your last breakout swing to the upside. Closed nice and bullish, taking out daily resistance. Boom, here is a pullback into your daily Heath level right there. Oh my God, how beautiful is that? It's almost like I invented this stuff, but I didn't, guys. Look at that. You don't get no more prettier. Boom. That's your range expansion to the upside. That's your weekly range expansion. Start looking at these candles on the same time frame that you're looking at as a range expansion. A daily range expansion may be a weekly range expansion, right? It's all about time and price. So here you are, nice little pullback as you're coming into that 3-month wick low. See that 3 days right there? Boom. There's your higher wick. That's taking out these stops. There's your push to the downside. This is not bearish. This is to be expected. You are simply pulling back into an area of possible support. However, this is going to be the main level down here. So even if we do get a daily close below there, we will wait for a test down to this level of support where we will look for possible new bullish entries back to the upside, targeting your last daily range resistance level, which will be this bullish candle's close. Welcome Mediastosis to retail level 1. Let me go back up because this chat just moved a little bit. Welcome to all you. Thank you guys so much also. There we go. There I am. And I hope I helped your, I hope I did explain that good enough. I've had a little bit to drink today, guys, which is okay. I am of drinking age. It is legal in America. So yeah, what we're looking for on Euro Aussie is going to be probably bullish continuation, because if the euro dollar does take off from where it currently is, you will see that increase in euro strength. And also on Euro Aussie, you're trading against the euro versus the Aussie. So whichever currency out of those two are the strongest will prevail. And if I take you over here to Aussie USD, you can see that Aussie USD is doing exactly the opposite, right? Yeah, that's because Aussie is extremely weak. Now, this does kind of concern me a little bit, because Aussie is a risk on currency. So if it's taking a dive like this, it could also be because of Australian monetary policy. So don't take nothing from this. This is just me speaking out loud, and my brain does that sometimes. But like if you look at the S&P 500, it's making new highs up. Sorry, I was doing something for someone. That's why that was up there. I totally did not mean to do that either. So let's get rid of these levels. You can see that S&P 500 is making new all-time highs. Like, this was support. This was a big, deep close below support. Came into this bearish candle, and that was a buying opportunity. We know this in hindsight. We never know that's what's going to happen when we take entries. This is why we use stop losses. And this is also why I say use 1%, 1%, because you can take multiple losses in a row. So don't try to get rich quick. It's about understanding price, how it acts, how it works. So this way you can become successful. This is a long-term game, guys. If you're brand new, you just started learning how to trade 2 months ago, please do not try to quit your job yet. In 3 to 4 years, you may be able to do that. So look at it as a long-term gain. It's about making your better self longer term. This is making higher highs. So a lot of people are looking for this thing to become bearish pretty soon, because yeah, you got divergences all over the place, probably on every single higher time frame. Well, no, you do not. Not on the 3-day. There's no divergences there, are they? That was a higher high. Oh, look at me. I can't even grab all of this thing. That's your higher high. So, yeah, I mean, some people are looking for it to return to the downside. It's been going up extremely fast. So, don't try to short it yet. Trust me, when this thing is bearish and it's ready for us to short, I will let you know. Last time that the S&P 500 came off, right here, back in March, it was a fantastic. I wasn't looking at the daily. I was watching the weekly. Here we go. Let's get to the weekly real quick, and I'm going to show you my entry on this thing if you're new. So let's put this in here. Boom. This weekly candle, that is a massive bearish candle. That is your weekly range. Look at how many weekly, these are all weekly candles, right? Slow bullish moves to the upside with slight bigger ranges to the downside. But when this monstrosity came in, yeah, we were looking for shorts, right? We can't short up here expecting this to happen. But when this does happen, we can absolutely be looking to take shorts on a 50% test of that range to the downside. Well, I did it wrong, so it looks like it's the 318, but let's do it this way. From the upside to the downside, this thing just isn't working for me at all today. That high to this low, you can see on this retracement, you tested right into that 50 spot. If this much bearishness is going to continue, this is going to be a fantastic spot to look for bearish entries. What are you targeting? That low. So let's do this. Right there, that's that 50 spot. Let me just show you this. This is hindsight, but I took this position in real time. Right? Here we go. This is that weekly. There you are, your weekly closed red. On that I knew I was good. There is no reason for me to exit my short position until I get a weekly close above this week's open. Right? Yeah. Yeah, there's no need to go through this. It was a fantastic trade. Now, once we took out this weekly open, that's your exit. That's a pretty nice trade. That's a couple $100 on the S&P 500. Almost, yeah, $500. 2,000 shares at $500. That's a nice trade. So, yeah, if S&P 500 tries to become bearish, we will know. We will know. This isn't bearish. It is still going higher. Yeah, I haven't made it down to the bottom.
He asked you
At the top.
and then he asked again at the bottom.
Oh, SNX USDT. Yeah, this is the Crypto Weekly Outlook, and I'm doing S&P 500. Thank you, baby. SNX USDT on KuCoin. Remember, Bitcoin is the tide that lifts all ships. So if Bitcoin's going to move higher, so is this thing. This thing is on a massive bullish trend. So like if I go into the weeklies again, just real quick and back price out, you can see that, I mean, it's moving higher. So several weeks in downtrends is okay on this asset. Unfortunately, it's massive percents off from the highs, but these levels that we were watching the other day, they look to be still holding, right? Let's get rid of this one. Sorry. TradingView just can't keep up with my clicking. So this is your daily resistance or your daily heat level, or aka daily supply zone. So once you put in that bullish close, you had another push down into another area, but this area, instead of calling supply, it's called demand. Because anything below price is demand, anything above price is supply. So there you are. A few days you've been trading. Notice how on this wick you tested that level but closed below it. Next day, tested that level again and put it in a higher close. Here was your first bearish day. Did you take out the open of this bullish day? No, you have not. Are you looking for shorts here? No, you are not. Are you looking for longs here? No, you are not. However, if you get a push down to this level at 8 spot 818, 8 spot 18, that might be a good level to watch on an 8 or 4 hour closing basis. As long as you ain't closing 4 or 8 hour candles below that, that might be a fantastic area to look for bullish opportunities, and you will be targeting that resistance level. That will be your profit target, right? Because price is trying to adjust, coming into its first area of resistance. It's normal that you come into that and get a slight pullback. So watch $8.18. Daily close below that, you're coming down here possibly to test that area. So you're not looking for longs if that happens. Watching closes is an ability to give us possible trade entries. So it looks okay. It's not I mean, this is an outside day on the reversal. There is your bullish engulfing. Boom, took out the low of that candle, closed above the high of that candle. That is the textbook definition of a bullish engulfing candle or an outside day reversal candle. That's what it looks like. You can see multiple tests of that heat level already though. So maybe look for one on a smaller time frame. Possibly then. We don't have one. Not on the 8 hour. So let's go down to the 4 hour. We want to get it below that 8 hour. There we go. Right there. Watch that 4 hour support level. Right there. If price starts to head lower, you do not want to see a 4 hour closure below $7.91. That gets you below that daily level, but keeps you safe on the side of support. Closure below that, you're coming back down here to test that again. So you're not looking for bullish entries upon that if that were to occur. Let me go up. Thank you, Janet. My baby. Oliver's string quality is fire today. Oh, I'm glad it's fire today. because that's a problem. I'm still waiting on Elon. Me and Elon are not speaking to each other anymore because he refuses to respond to my texts, my emails. I'm starting to think he's seeing somebody else. Come on, Elon, give me my dish, bro. I wish I could be as intelligent like you on the... Dude, I am not intelligent. I have just been looking at charts for years. And if you are prepared to you yourself invest the amount of time that I have been looking at charts, you yourself will be right where I am. It's just time, guys. That's all it is. Practice, time, that's it. When you have enough of that, man, you're going to be killing it. So KF was the one looking for. I hope that answers your questions, Mr. KF. SNX USDT. $7.91, 4-hour closing basis. Juice is in the house. What's up, Juice? Heath, as a full-time trader, how do you self-pay yourself from trading? Do you withdraw? I do other things. I have other means of income. What I try to do is simply just, I start the year with a small percentage, a small amount of money, and I try to grow that. Yes, at the end of the year, I will then take whatever profits I have, and I will open another, or not another account, but start the year off again at the same starting basis, and then pocket whatever else. As far as like intra-week things for simple things, I have a bank account, and I just buy the stuff with that. I hope that makes sense. It's going to take time. You're not going to change your life overnight trading. I don't care what you see on YouTube. It's not going to happen. Just give it time, learn, start to watch. Don't take what I say either. Backtest it. See if what I'm saying seems to work. If you can build a strategy out of what I'm saying, then my job is done here, right? It's not about what I say. It's about this guy seems to know what he's talking about, and I am starting to see these things start to play out more. Maybe I should start to go back in time and see if it played out back in time. And if it did, and you can build a successful strategy using it, then my job is done. Mindy Heath, how easy is it to make 10 to 20% a month on Forex trading? It's not. It is not easy. I mean, is it possible? Of course. It's possible. I mean, possibly. I'm going to go as far as say it's possible to make 1% per day. Because I've did it. You know what I mean? Because if you get on a trend and you got a high amount of leverage on a position, you're going to make way more than that. But if you aim for that, you're setting the bar very, very high. I can make 10% on one day trade, and as long as I don't trade for the rest of that month, then technically I made 10%. The problem with trading is keeping the profits that you make. And in order to keep the profits, you have to not overtrade, not revenge trade, don't FOMO, like all the things that you hear over and over again. It's so boring to hear it, but those are the answers. Like, that's how you do it. Like, I took 3 Forex trades last week. All 3 were successful. The week before that, I was 3 out of 4. The week before that, I was 4 out of 4. I'm not trading 30 times a day. I'm trading 4 times a week tops. Like, I'm done after that. 2 trades per week, if they're profitable, I'm okay with not trading at all for the rest of the week. Because if I'm risking 1% on the trade and I make 5%, then I just basically averaged 1% per day. It's just about math. It is possible to make that much, but if you put a bar at those levels, you will fail. So try to make a small bar. Like, strive for 2 to 3% per week and go from there. And then once you start to see the charts and you start to make good trades and you're controlling all of your emotions and all of that stuff, then you can set the bar higher. You can make 100% in a year. It's happened to me. So that way beats 10% per month, right? But if you strive for those high bars, you're going to crush your own emotions because it's not achievable every month. Just like it's not achievable to make 5% every week. That's a very high bar. 5% per week is very high. Very high. Strive to beat the S&P 500, guys. I know that doesn't sound good to you because you want to make money, but as a professional trader, your job is to beat the S&P 500 year over year. That's your job. If you can make more money than the S&P 500 does, which is from 8 to 12% per year, you are a profitable trader. And I apologize if I sound like I'm preachy or not. I'm not preaching at you, I promise you. I want to see all of you become successful. But yeah, that's a high bar, 10 to 20% per month. Very high bar. Juice is helping people in the chat. Thank you so much, Juice. I appreciate you, man, more than you can even know. Time is money. Absolutely. I understand that. I do. Trust me, I do. IOTA is looking really hot. Let's go take a look at it. I got no problems looking at it. I haven't traded it, but I will absolutely look at it and see if we can find some levels for you to watch. You didn't tell me what you're trading it on versus what asset, so let's just go look at this exchange I've never even heard of. What was it? I've heard of Binance US, sorry. Of course I've heard of Binance US. I don't see how they have a Binance US division when it's illegal to trade on Binance in the US. Doesn't have much liquidity. I can already see that in the closures. It gaps a lot. Let's look at the hourly. Yeah, I mean, that's not terrible. It's not great, but it's not terrible. I've seen a lot worse. Here we go. Daily. Daily. There was your last daily bullish candle on IOTA USD. You closed above it. You have seen bullish price action since. Your next level of daily is going to be 79 cents. Like I said though, guys, there are going to be smaller time frame levels in here that you may find resistance at. Let's go to an 8 hour and see. There's a bullish 8 hour candle right there at 75 cents. So you might find resistance there before you ever get to that daily level. Right there, 75 cents. So watch that level. Don't look for longs right now. Watch this bearish candle. Make sure you're not closing any 8 hour candles below the open of that candle. 70 cents. As long as you're not closing 8 hour candles below that level, you could possibly target 75 cents as an intraday trade. Boom. For bullish continuation. But don't buy highs. That's definitely the high of the range. Be very, very careful. It's, as far as looking really hot, it's in a longer term downtrend like Bitcoin and everything else. And bullish price action gets sold in downtrends. You got to come all the way up here to 92 cents and break and close above that and then hold that area as support and then start taking out highs to look really hot. Right now, this is just simply a possible shorting opportunity. You're coming into the 50 spot. So a daily test of that 79 cent level would put you right roughly around that 70 or that 50 spot on the RSI. Bots and algos are going to trigger that off as sells. So just be careful. Can it break above and go above that? Absolutely it can. That's when you want to look for higher low support. That's when you want to take your long entries. Because then the bots and algos that are fired to take sells on that 50 test at a daily resistance level, they will then switch and start to buy those levels. Because they want to make money just like you want to make money. And they're following price just like you're following price. We don't chase price, we follow it. What, baby? I'm at the bottom. Oh, I'm on Binance US, that's why it looks bad. Oh, which exchange? I don't know. I've never traded it, so I don't know which exchange to look at it on. If I look at it on Binance, just the regular Binance, it's calculated by TradingView, it looks exactly the same. There's your daily resistance, there's your break above, you're coming into next daily resistance level, which is basically what I just said on the Binance US chart. Let's go look at it on a different exchange. Maybe it's doing good on Bittrex. Nope. Same thing. You haven't even closed above daily resistance on Bittrex. Huobi. Yeah, you're working on a daily closure above resistance on Huobi. But still, there's that 75 cent resistance. It's going to be pretty close to the same on all exchanges. It still looks bad, right? If you go back up here to the high that it was put in when it was in a bullish market, making higher highs and higher lows, you're probably off a good, let's say 80%. Yeah, 81%. That doesn't look good. That's not hot. You're off 80% from the high. How high are you off the low? 27%, 30%, 29%. That's not hot. That's a retracement. People will look to short this. It's up to the bulls to prove themselves, guys, in a downtrend. And in an uptrend, it's up to the bears to prove themselves. When this was going on over here, the bulls were in firm control. Over here, it's the opposite. BTC closed on daily resistance 34,258 from July 11th. It didn't close above. We will see tomorrow. See, that's the right mindset. It didn't do what you wanted it to do, so wait for more data. Perfect. It's beautiful. Let's see where we're at. Well, on the Coinbase chart, we do have a close above resistance. No, we don't. You're right. Fantastic. Look at that. However, yeah, it is a slight close above. Slightly. It might not be on like KuCoin or something. Let's go look at KuCoin. Let's see if we got that daily closure above resistance on KuCoin as well. It looks like we did. It's just a slight close above. Those aren't very good. So yeah, it's okay to treat that as a knot. As a knot. When you see a breach of resistance, you want to see a breach of resistance like this, right? There's the first test of resistance. Boom. Big, strong close above. In fact, if I drew a fib on that, if I targeted this day alone and drew a fib on that, it would be pretty close to the 50% mark, right? Let's stretch it out so you can see what I'm talking about. There's your resistance. That yellow line is your 50% mark. That means the bulls are stronger on this day. This is what you want to see. Big, strong break. You want the middle of that candle to be at resistance, as that means the volume kicked in to get that close, which is good. But the sellers aren't here yet. They will arrive again shortly. You are in a downtrend. Where are you on the RSI on this thing? You're trading well above it, which is good for the bulls. They gotta hold it. They absolutely have to hold it, guys. So coming back down here to a 50 spot, if you put that on price as that last resistance level, that'll put you right about there. So this is what I'm saying. That will be a crucial area. If the bulls are in charge, if they are controlling price right now, you will see a retest into that level. You will see it hold support. Then you will see a bullish reaction from it. If the bears are in control, that will fail. And then you're looking for short side sets again, unfortunately. I feel like Bitcoin is doing dead cat bounce because there is literally no volume. Right? I mean, yeah. It's in a downtrend. So, yeah, there's no volume. There's not much bullish volume. In a bull trend, volume tends to decrease. Like if you, I don't use volume and analysis. I don't care because I see price. I used to use volume when I was earlier in my trading career. Let's go back to Bitcoin. Let's pull up the volume indicator. Because once you start to understand price, you don't need to look at volume because you can see that, right? You can see volume in the actual candle, in the close. This is the one I want. So here we go. All right, so let's go back to the S&P 500. Usually decreasing volume is a sign of bullishness, like in every bull trend almost ever. Well, it's been very volatile of late, but you can see like when price was over here trading up, volume was decreasing. That's bullish. So is in a bear market volume decreasing bullish? Not really. That just means continuation to the side that it's going. You need very high bars of volume to basically make trend changes. And even then, it's difficult to say that it's going to be a trend change. Right? Because more selling volume can build with continuation. So I just don't pay attention to volume anymore. And I don't care about volume either. On volume profile, guys, I'm going to go ahead and tell you, if you're looking at volume profile on like a daily chart, I just didn't do that right. You're doing it, you need to look at volume by session, right? The session volume. That's the volume profile to look at. If you put a volume profile on this year trend and you see like, I don't need to see it, I can tell you that this section of price right here is going to be the point of control. That does not matter. You need to look at volume per session. That way you can see where the point of control is for the volume of the day. Remember, these markets are traded by market orders every single day. And then TradingView has that, right? Just go right here to volume profile, session volume, HD. It won't show you on a daily, but it'll show you on a 4 hour, 1 hour, intraday volume. That's what you want to see, right? Here's your volume profile. This is by session, per day volume. Here's your volume point of control on this day. Look at this. Boom. This is bullish. Here's your point of control. Boom. This is bullish. If you're looking at volume in a long span of time, you're doing it wrong. All right? This is the way to look at volume profile on the daily range. The daily range. BTC daily. Oh, sorry, I read that. Yeah, we will watch it tomorrow, Mindy. Absolutely, you're in the right spot. I feel like BTC. Yeah, I read that. Thank you, man, from analysis or from the analyze. I really learned something from you. That's all I'm trying to do, my friends. The indicators search for Gaussian channel. The Gaussian channel. I think I heard Crown speaking about that the other day. I don't know anything about it, man. Crown's Crypto Cave, go check him out. He'll explain that to you. I don't know anything about it. I don't know much about him either, but he seems to know what he's talking about. But that's the first time I ever even heard of a Gaussian channel. So I don't even know what it is. So I can't help you. I'm a price action analysis analyst. I don't care about indicators. I only care about price. Open, high, low, closes. Your like ratio or ration is fire. My like ration. Yeah, if you guys don't mind smashing the like button, that always helps, my friend. Oh, there you go. Corrected it. Ratio. Yeah. Thank you so much for the likes. I really appreciate it. What is point of control? Point of control is it's something it's basically where the highest amount of volume is on a volume profile. But like I said, guys, if you're looking at the volume profile on a year's worth of price data, you're doing it wrong. Volume profile only matters. It's volume at a specific price. All right, let me explain this real quick. Volume bars down here on like the oscillator on the bottom of your chart, that is volume by time. What a volume profile is it shows you the amount of volume that occurs at a specific price. At a specific price. So if price moves on a daily basis, which it does, daily basis, new orders are coming in every second of the day, giving you a daily range. Volume at a specific price can help you to make intraday trades. But like I said, I could never find any success using any of that stuff. Any of it. So that's why I don't use it. But if you want to try to make a profitable strategy out of volume profile, then use the session volume, as that shows you the volume, the point of control, which price of the day was the most volume traded at. And then hopefully that helps. Profile is the price. Down on the bottom, that's time. And the point of control is the most volume. To be expected, though, you provided the most value out of there. Much love. Hey, thank you, my friend. I hope I really help. Well, that volume profile is super interesting. It is. It's a fantastic. I mean, listen, there's a lot of profitable intraday traders out there, guys, that only trade. Think about it. Back in the 60s and the 70s, they didn't have charts like we have now. They literally had to write the open high, low, close on their chart. And they did that with bar charts. They didn't even use candlesticks. The real traders on the floor of the New York Stock Exchange, they used bar charts, right? That's what they used. And then when more technology started to come out, they could see at which price that volume traded was the most. Then they could take their open, high, low, and closes and then base a trading thesis from that data, essentially. I know at Gaussian channel you have to check. All right, I didn't even know how to spell it, so I'm assuming you spelled it correctly there. Gaussin. Gaussian channel. Which one do I use? Gaussian filter. Let's use the DW. That's the one that's got 2,886 hits. Is there a specific time frame that I should be looking at this thing on? On the daily, oh, this isn't even Bitcoin. Let's get over to Bitcoin, sorry. On the daily, S&P 500 looks good. Oh, yeah. Yeah, it's bad. I don't know how I don't know what data this indicator uses. But, yeah, it looks pretty good. If you back test it, just look at it in time. You can see here, but, yeah, I mean, it's like set of moving averages, kind of, sort of. Is what it looks like to me. Definitely got below it there. This was a point. Okay, so let's use this for instance. This right here was when people were looking to sell. We would have been looking to sell this too as soon as you took out that daily support level. So boom, there's your daily close. Any push up in price, that's when you're selling. So I mean, the indicator, yeah, it works, but price does too. And then since, yeah, looks like you're running in to try to get a test of that center line of the Gaussian channel. I will keep an eye on it. I'll leave it on here. I don't know much about it, but I'll check it out. I'll do some research on it, see what I can find. If it'll help you guys' analysis, I'll absolutely talk about it. Your analysis of the intraday analysis candles are out of this world. I want to get a good grasp of the heat zones in each candle close. This is what I am really working on. I revisit the videos. That's the best thing to do, Victor, because every video is... I am not the best YouTuber out there, guys. I don't come at you with a script and all this other stuff. I'm coming at you with real knowledge. That's it. That's all I'm doing. You can take from it what you want, because it's just designed to help. I just want to help people. I'm an intraday scalper. This is what I do. I live by the charts on an intraday range. And if that sounds good to you, then hey, you're in the right spot. If you're a swing trader, maybe I'm not the right person for you. These principles will work on higher time frames. And swing traders, they're just taking their entries and exits off of a higher time frame. But see, I use the higher time frames also to help my intraday analysis as well. He said, I don't understand this. Sometimes you take resistance to support on open closes red. Okay, Mindy, I'm going to explain this because you're not the first person to say that, and I understand what you're asking. So, this is the thing. The trend is your friend until the end of the trend. So, like, in this scenario, right here, when Bitcoin put in this low, right, and traded out of the area, we would have been watching the opening price of that bearish candle. Why the open? Because if Bitcoin is going to continue in its bull trend on a retest of that level, you would want to see a wick down to it and then a close back above it. As that would say, yep, the trend is still strong. It's more than likely going to continue to the upside. However, the support, the actual support for Bitcoin is going to be that close, because that's where that daily close was. So If it helps you to only look at the closes as support, then do it that way. And I will show you what happened. Had you been looking at this candle as the close, you would have no longer been looking for longs on a test of it, right? Because you're testing support again. This would have been support. This would have been support. But on this close, you took out that support, you took out that support. Your next support is going to be this candle. And there you stutter stepped for 1, 2, 3 days, and then you got your daily close below support. So now you're looking for pushes back up to that level to look for short side setups targeting next area of supports. So if this is your support, this would be your next area of support, the lower bearish close. And then this one, right? So that's basically it. That's it. This candle actually here, over here, is actually lower. So you can see, boom, there was a test of it and it failed. The next day you close below it. This just indicates that the bears are in such firm control of this asset, you can't even get a green daily close. That tells you something. That tells you that you're looking for trades on an intraday basis and you're targeting next areas of support on the chart. So once you took out this area down here, your next area of support would have been this bearish candle. But at this point in time, you're already liquidating so many over leveraged that technical analysis just isn't going to react. Because at this point in time, price is just going absolute bonkers. But as long as price is trading in a normal range, then your daily closes on a bearish candle is going to be support. Daily closes on a bullish candle is going to be resistance. If you're looking for continuation of trends, then that's when we're looking for the opens, right? We're looking for price to test the opens of that candle for bullish continuation. I'll make a better video about it. I'll do a better video, and then hopefully I'll script it out and everything to make it a little bit more understandable. If you're new to the channel, welcome. But over time, it will start to make sense to you. I promise. I got so many people that thank me every day because now they're starting to see it, and you know, it's starting to give them a successful trade entry. So it takes a little bit of time, and I'm not the best presenter in the world either. I can tell you that. So just give it some time, Mindy. Oh, it just glitched out on me. How long have I been going? 1 hour, 17 minutes. All right, we're doing good. And then Victor Edom, your classes. I don't really look at it as a class. I'm just trying to help people. Do you think that we are breaking a falling wedge on Bitcoin? Well, you can see it. I mean, yeah. I mean, I don't see the falling wedge that people are looking for. All right, so here, instead of doing this, let me delete this. Let me go show you what a wedge looks like, first and foremost. If you're looking for wedge patterns, I'm not a pattern trader myself. But if you're looking for a wedge pattern, this is what you're looking for. This is the DXY. So this is an ascending wedge, right? So if you get a daily close above this ascending wedge, then you've broken out to the upside. If you get a daily close below this ascending wedge, you've broken out to the downside. Wedge formations and wedge patterns generally are, if you're in an ascending wedge, people generally look at that as a bearish formation, and in a descending wedge, people generally look at those as bullish formations. So if we go back to and if you want to see a bullish ascent or descending wedge, there you go. Let's get rid of this. So on the Euro USD, you can clearly see. So let's just use this candle. So that would have been a push above, but you didn't close above, and that's what counts. And then you take another trend line from here to this low. Boom, right there. So there's your descending wedge. So we know that we took out support on the Euro Thursday, and then Friday we closed as a doji, right? But this support candle, it was broken. So we're getting to an area to where like you may be able to see a big breakout out of here, but at the same time, if you're unable to close the daily candle above this bullish candle, then you're going to be looking for lower prices. But that's a wedge. So let's go back to Bitcoin. I don't see the wedge. Like, I've tried and tried to put one on here. When I take my trend lines, I do them from highs to highs, right? Because a close below, even a few wicks below, is not good. So I guess that's your wedge formation. I don't see it. Maybe if we, well, no. There's no way to get it. Like, even if you took it from, let's use that low to this. I mean, then it starts, no, I just don't see it, man. I don't see it. So instead of looking for a wedge formation, watch support and resistance, right? This is going to be resistance until you get a daily closure above it. And support is going to be all the way down here. But we're not looking for that to happen. We can watch this bullish candle because that used to be resistance. And no matter what YouTube commercials you're seeing nowadays, breakout, retest, it does work. That's how price, that's exactly how price works. So I seen the commercial the other day. Oh, the old breakout, retest. It's because he doesn't know how to use it. He doesn't know what he's looking for. But yeah, we're going to be watching this level. 32,816. As long as you're not closing dailies below that, we're going to be looking for a higher low support to be formed there. We're going to be targeting the highest wick as that range expansion to the upside. It's as simple as that. Don't worry about patterns and stuff like that. Just focus on highest closes and lowest closes. Weekly closes, even if you don't like using dailies, use weeklies. Let me show you this. This will blow your mind even worse, right? So this weekly candle, we at CTM, we here at Trade Talk, we have been watching this close, right? This was the lowest weekly close until last week. Boom, there's that close. Price went lower, took out all the stops from there. Now, where does Bitcoin close? Also, here's your bullish weekly Heath level on a weekly. Where are you finding resistance? 34,708. If you cannot close a weekly above that, you're looking for another test of 32,288. It's that simple. This candle closes tomorrow at 8 o'clock p.m. All right. Right now, this does look good. I do love this long wick to the downside, but this close needs to get above that. Has to. Otherwise, you have tested resistance and failed on a weekly closing basis, which isn't going to look so bullish. Wicks don't matter. Wicks are targets. If this thing were to come up here, test this, and then close way down here, my bearish targets for next week would be this wick low. But Bitcoin does look like it is getting a bit of strength. It could just be exhaustion, though, so sellers will be looking to re-engage. Please watch the beginner playlist. Thank you, Juice, my friend. Juice, why aren't you an admin, my friend? Oh, you are a moderator. What am I talking about? There's your wrench right there. Thank you, Juice. Alright guys, I'm gonna have to start wrapping it up, so drop them questions in the chat. We've been going for about an hour and a half. Cheers to you too, Jay Carey. I got a drink right here, my friend. Cheers. But still lagging too much? Yeah. GCDW sampling period looks 75 much better. I don't know what period it means. It just, okay, great. I'm glad I answered it here, Danny. When we close it and reacts quicksand, like 1 year. For 1 year, when we close and it reacts, I don't know what you're talking about, Danny. Apologies. You said it gaps too much, which translates that isn't much liquidity. Please How can I know that? You'll observe that I am behind because I'm taking notes. Thanks. Okay. This is a perfect. Okay, I can answer that. It's as simple as this. So, Oanda is one of the best exchanges for Forex, right? So, on Oanda, if I go into an hourly chart and just make it wide, so like when this bullish candle closes, you'll notice that this candle right here opens at the exact same price that that candle closed. This candle came down, tested the opening price of that bullish candle, then moved up. Then this candle tested probably a smaller time frame level and then moved down. But the close was the next candle's open, the exact same price. That means there is tons of liquidity there because where it closed, it was able to open at the same price. So when you have a chart like ADA, oh, sorry. Let me go in over here to the purple list, pull up ADA, go to an hourly. So when you have something like this, here is your bullish candle. Let me pull it up. Here is your bullish candle. You see where that closed? If I draw a line on that candle's close, I still didn't get it. What in the... There, you can see that this candle opened because that's the open of this bearish candle below it. So that means there wasn't enough liquidity in it for it to open at the same price that the last hourly session closed at. There's a gap in price. So that means there aren't as much buyers and sellers. Market makers get a bad name, guys, but market makers are the reason that you are able to buy at whatever price you want to buy at, and you are able to sell at whatever price you want to sell at because they provide liquidity. They buy from one exchange, they sell to another. That provides liquidity, so that way you can always buy and sell where you want to. When you see an asset that is not opening at the same price where it previously closed 1 second ago, that means the next market maker that came in that provided liquidity was providing liquidity lower than where the last second closed. So basically when this candle closed at 10 o'clock in the morning is when this thing closed on July 24, 2021. At 11 o'clock in the morning, July 24, 2021, there was nobody sitting on the bid or the offer at one spot 212586. There was somebody sitting on the bid or offer at this close, this open at one spot 211999. So there is a gap there. That means nobody was providing liquidity between those two prices. So if you had a stop loss setting in the middle of those two prices, you would not have gotten filled. Chances are you would have gotten filled here at this price on the open. Hopefully that explains it. Look at this coming here. So people are going to be like, oh my God, we're going down. It's all over. Bitcoin's going down. But remember, if you're looking at the daily and you're following this channel, we are not fretting. As we know, where is Bitcoin? Where are you at? I'm looking at all over the charts. I'm not even on the right one. We are looking for a test. I've got too much stuff going on here. Over here, back over here. I did post it on Twitter too, guys. If you don't get it here. I don't know why TradingView I click on this and nothing happens. This is the price we're watching. So, yeah. Bring the red. Bring it. As long as we're not closing below that, we're entering. Let me go. Okay. Darn. Here. Thank you. You're welcome. I'm new to your channel and I'm already learning a lot from you. Thank you. You are welcome, my friend. Thank you for being here. Why is the daily close or open important? No one is planning them. No one is planning them, but once they happen, that creates a ripple in time. I don't know, my friend. I just don't. You know what I mean? I can't give you any exact answer. I mean, all right, so each price, I think I just explained it on the liquidity. That explains why you have gaps and stuff. So that, it matters because that's where it opened. That's where liquidity was. So when price goes back to where liquidity was, generally there's going to be more liquidity there. That's why you have reactions at these levels. And like I said, if you're a naysayer or a doubter, don't take what I'm saying to be the gospel. All you have to simply do is go into bar replay and you can find the answers yourself. It'll show you. So I hope I explained it. What do you think of ICP? Insane Clown Posse? They were big back in the 90s, but I never liked them. I know you're talking about a crypto, my friend. I was just pulling your leg. I haven't looked at it in a while because nobody's asked for it in a while. Nice bullish day yesterday. Or today, I'm sorry, because we just closed at 8. So this is, yeah, nice bullish day today. Took out that resistance, and that resistance. Came into this old support, closed below it. So it still looks good. This is going to be a target for near-term setup. Jesus. Near-term setups. So look for support levels on a smaller time frame. There's an 8-hour all the way down there. I mean, I don't like using past data. I like using the closest data. But sometimes you just have to use past data because it's all there is. Alright, so here. This 4-hour candle's open and closed. If this 4-hour candle gets a close below it, watch this candle's open. And so on and so forth until you get down to here. Because down to here will be probably more or less the actual support. This is why you don't buy highs, guys. Because price always comes back and finds support somewhere if it's going to remain bullish. Always. Oh, that bullish closes higher. But that's just another gappy chart. Was there an 8-hour level higher? No. Daily level higher? No. So let's find an hourly. There's one right there. Beautiful. Watch that one first. And it's as simple as that. Right there. Price comes down at $39.32. Make sure you don't close no hours below that level. As long as you're not closing below that, you can see possible bullish continuation. But that doesn't go in line with Bitcoin, and Bitcoin is the boat or the tide that lifts all ships. Bitcoin, we're looking a little bit lower. Alright guys, I'm going to have to wrap it up, unfortunately. Nobody teaches this on YouTube for free. No, they do not, my friend. Absolutely not. That's why I created the channel. I just got sick of people asking me questions that I've heard 1,000 times that means nothing. Nothing at all. 90% of the people that are selling stuff on YouTube, guys, aren't traders. I'm just going to let you know that right off the rip. They're internet marketers. That's why they're not teaching it. They don't know it. They will now because I have made it public. So before I go, guys, I just want to say thank you so much to my channel members and Patreons. Absolutely. I keep doing this because of them. I mean, they support me. They're with me. They have my back 100%, and I always have their backs 100%. Thank you guys so much. I can't thank you enough. So on Bitcoin, we're watching that main level. That's what we're going to watch. Don't care about no big hourly falls or nothing like that. We're going to give Bitcoin a day or two. There's not much liquidity on the weekends. The bots and algorithms, they trade 24 hours a day. But people, when they come into the office on Monday morning, that's when they're going to start doing different things. They're going to start setting different orders. Basically, that's when the main volume is through the week, from Monday to Friday. So that's when we're going to be looking for a test of Bitcoin at that price point. I'm not looking for this to happen today, tomorrow, maybe Wednesday or Tuesday. But as long as we're not closing below that, we're still good. All right, we're still good. A close below that, I will be looking for short side setups on the corn. Simply because you will have come in for a test of this 50 spot on the RSI, which is bullish. But if you cannot maintain that test at this level of support, then the bears have came back and they will be back in control, unfortunately. This looks extremely bullish, but I can show you price action that looked even more bullish that got sold into. All right, so a few green days means nothing in a downtrend. You need multiple green days in a downtrend. You need higher low support in a downtrend to start looking for bullish entries. You guys have a fantastic night. I will be live for you channel members and Patreons tomorrow morning at 11 a.m. Eastern Standard Time. Also, there will be a Forex weekly outlook tomorrow at the market open, 5 o'clock p.m. Eastern Standard Time. Have a fantastic night, everybody. Make sure you trade safe, trade smart, and happy trading, everybody.